So Anglesey Mining, I took over as CEO in August last year. It's a project, or the key project, which is the Parys Mountain, the old mine on the island of Anglesey, has been around for a long time, and I've followed it and studied it for a number of years. And when the opportunity came to get involved, it was a bit hard to say no to. And hopefully you'll understand why at the end of this presentation. Key investment highlights for Anglesey. I mean, we have fundamentally two key assets. The first one is this Parys Mountain project on the Isle of Anglesey. Significant resource base, and it's a VMS, which is a volcanogenic massive sulfide. The analogy is the black smoke as you get in the middle of the oceans. It's been around for a long time as a project both as a production centre and in the market. And at the start of January last year, the company, my previous management team, put out a preliminary economic assessment which showed very strong returns from some very conservative commodity prices, which have got a lot higher now. So, ipso facto, I think it's an even better proposition now than it was back then. Additionally, there's significant exploration upside, and you as investors, as an investor myself in resource stocks, you want exposure to projects that have got the ability to get to production and generate real cash flow, but also you want to see these things get bigger, because nothing impacts the share price like a good drill result, as Alien saw with their silver last week. We say this, there's potential for low carbon copper here, and the reason we say this is, you can't really see it in this photo here, but when you stand on Parys Mountain, which isn't really a mountain, it is a hill, but you look around and you can see wind farms in all direction. One of the biggest industries on the island of Anglesey these days is renewable energy. And so we think there's the ability to tap into that electrical supply, which will give us huge benefits over and above other copper producers globally. And importantly for any mining project, infrastructure is so important. I've heard that at a 2% copper equivalent grade, it's not the highest grade project in the world. Well, that's probably fair comment, but I'd rather have 2% copper with all of this infrastructure in place, and we'll talk about permits later, with a lot of the permitting in place, rather than have something that was double the grade in the middle of Western Australia or the middle of Africa, quite frankly. So infrastructure is critical importance to any resource development. On the iron ore front, we have a 20% stake in a project in Sweden, or in a private company that owns a project in Sweden. We have a right of first refusal to take that to 70% for a relatively low amount of cash, or in equity, really. No, it's not cash. We'll go into this a bit later, but it's a very, very large resource still. It produced 180 million tonnes and was shut in 1989 when the iron ore price hit $26 a tonne. And again, it's surrounded by infrastructure. And as we know, particularly with iron ore, it's all about the infrastructure. You've got to get this stuff to a port, or you've got to get it to a market. Quick rundown on the corporate side of things. Slightly less shares on issue than Alien, 248 million. Which isn't a bad effort, given this company's been listed since 1988. We have just over $1 million in cash, so enterprise value of about of 11 and a bit. And a summary of the board: the chairman, the finance director, deputy chairman, and Andrew King. Howard Miller, one of the non-execs. They've been with this company for a long time. So we've introduced a bit of fresh blood with myself, but also with Andrew King and Namrata Verna too. Very highly regarded and well-known people within the industry, and very much in the now of what's going on within resources and financing. So we're very pleased to have them on board now. Again, a quick summary of the three projects. Importantly, with Parys Mountain, we own 100% of it. It's a significant resource. 16 or 17, close to 17 million tonnes is not small by any stretch of the imagination. With this PEA, the economic assessment, importantly, because of the infrastructure benefits, we're looking at pre-production capital of about $99 million. Now, at spot, that generates an NPV of over 270. So the The capex to NPV ratio is very nice. And again, we'll talk about the permitting. It's well advanced. We have planning permission in place for certain aspects, but they're quite old planning permissions, so we're going to get those reviewed. Again, with Grangersburg, it closed in '89. There was a PFS done in 2012, which generated some very, very strong numbers. And we're just in the process of updating those numbers now. I mean, they're 10 years old, so we're going to get those updated. And that work has started. Our third asset is we have a 12% stake in Labrador Iron Mine Holdings, which is an OTC-listed company. They have a 52% stake of some direct shipping iron ore assets in the Labrador Trough in Canada. Historically, have been very successful in their developments, and they've got another project, this Houston project. So, I'm not involved in that. Some of my fellow board members are involved, and so, I wish them good luck with that, and hopefully we can see some benefits there. So, in terms of Parys Mountain, I mean, this is the main show, really. Excuse me. I mean, this photo is let's say a picture says 1,000 words. There's this big mass over here, which looks a bit of a mess, and fundamentally it is. And the reason it's such a mess is mining first started here 4,700 years ago. And effectively what Parys Mountain is it's a hill that has just got copper, lead, zinc, silver and gold just at surface, or used to be at surface. And when this was discovered, the Bronze Age miners went in there and took some metals out. Then the Romans came and had a go. And more recently, in the 18th and 19th centuries, later, or throughout the 18th century and early 19th century, there was a very large open pit copper mine here, which then went underground. At one point, this was the largest copper mine in the world, and this, you can't see it that clearly on this, but that there is one of the old open pits. And amazingly, all of this was moved by hand, all those years ago. So this is really important because this is now like a heritage area. We own the bulk of this land freehold. We've got an agreement with the local heritage group that we've built a car park in. There's all these walkways around it, and effectively we don't intend to do anything on here. We see this as sort of a no-go area, and very important. It's part of the local heritage. Locals love it, and we're very proud of it. The only point the area I would point out is this cleared area here. Was actually disturbed. Well, it wasn't disturbed in the original mining days, but it was disturbed and cleared when the original mine was built, and that's where they built the process plant. So we have access to that area there. But importantly, when it comes to permitting, people sort of say, "Oh, you're never going to get this permitted." I mean, I've had brokers in London tell me they've been to this site because you can do a site visit to Parys Mountain and just have a walk around. You can see all the old pits, and I've had brokers tell me you're never going to get that permitted. It's a mess. You're never going to get it permitted. Well, we have no environmental liability on this side. That's all been handed over to the Welsh Assembly. And importantly, this shaft was sunk in 1989. Oh, it started in 88. So when this was sunk, and they did 1,000 metres of underground development, which sort of goes along this sort of strike here, at a depth of 280 metres, they mined 2,000-tonne bulk sample. They brought it to surface. They built a pilot plant here. They processed that material through the pilot plant, and they sold the concentrate to Pasminco, who smelted it down at Avonmouth. So during that phase, this was fully permitted. So we've got a significant advantage that under the because we own the land freehold, we have planning permission, we own all the mineral rights. We're very well positioned relative to other players in in this industry globally. This is the local town of Amlwch. It is one of the poorest towns in Wales. It's sort of been bypassed in terms of a lot of the EU grants and EU funding back in the days, and they all understand. I mean, they wake up every morning. The first thing they see when they look at their window is this head frame. So they're very familiar and very comfortable with mining generally, which is very important. Brief rundown of the results of the PEA. There's a lot of data here. There's almost we're currently drilling some more holes now, so we'll be close to sort of 370 holes by the time we've finished. This resource is relatively well understood. I mean, what you see here, that little line going down there is actually the shaft that's in place. We'll be looking to mine this white rock zone here and this engine zone. Now these are quite high grade. by anybody's standards. And they're very well known. That's about 75, 80% indicated, so they're well drilled out. This northern copper zone, which is about just over 9 million tonnes, that is all inferred, so we do need to do a bit of work there. But hopefully we'll sort of move the drill rigs over there later this year. But in terms of the mine study, importantly, this mine plan was put together by a group called QME, which is they're a mining contract and tunnelling group from Ireland. And they're currently the mining contractor for Boleden's Tara mine. So, I mean, I think they're one of the best mining contractors in Europe. And when they did this mine design 18 months ago, I mean, these guys know what it costs to move a ton of dirt and to bring it to surface. They've got all the gear, they've got live pricing, got their hands on live pricing. So when I look at these prices, when I look at the costs, the $99 million capex, and very, very competitive all-in sustaining costs, it gives me a lot of confidence. I know for a fact that the mine plan won't end up looking like this. There'll be changes to it because it will go through another set of optimisations. But we're in a very, very good position, starting point here. We've got a lot of data. We've got a very strong economic assessment, and it's just the perfect sort of starting blocks to move forward from. In terms of the metal demand, we ran several different scenarios for the feasibility or for the PEA, and the preferred rate is this 3,000 tonnes per day, which is just under 1 million tonnes per annum. Now, under that scenario, we produce, on average, about 14,000 tonnes of copper equivalent, which is we take all the other metals and we gross them up into a copper value, just to try and make it easier, because there are multiple metals here. But all of these metals are back to Bill's point about sort of the electrification and decarbonisation of the environment or of the economy. All of these metals play a part. I mean, copper is going to be critically important in anything to do with electrification, as is silver, and certainly zinc. I mean, zinc plays into several mechanisms. With zinc air batteries is potentially one of the ultimate points of nirvana for batteries. Under increased steel use, zinc plating is going to be very important. And interestingly, there's a nice little kicker from silver and gold from the project as well. And this is based on very low recoveries. So the current permitting, it was all permitted in 1988. As you would expect with most permits, they have certain conditions, including crushing underground, just from a noise aspect, and there is already a preferred haulage route for the concentrate to get to the port of Holyhead. So, I mean, all those things have been taken into consideration. For all intents and purposes, if we had the money in the bank, we could probably start the underground development tomorrow. We wouldn't, because we're having all these planning permissions reviewed to bring them up to modern day standards. But in theory, we could. And what's nice about that is that there's a precedent here. So as we go through this process of reviewing all of the old permits and all of the old environmental work, there's a lot of precedents we can put in front of the mineral planning department and the local council and say, well, this is what was discussed 20 years ago, 25 years ago. Yes, there may be some changes required, but there's not an inbuilt sort of inherent knowledge that these things are doable. Metallurgical test work, I get asked a lot as to whether we're going to be doing a pre-feasibility study or a feasibility study, and it's a tough one to answer because some aspects of our work or our database is well beyond bankable feasibility status, including the metallurgy. Including the metallurgy. There are very few projects in the world that go through into a bankable feasibility stage that have a 2,000-ton bulk sample taken and run through a pilot plant. Most projects are basing their metallurgy off core and laboratory test work. So we have elements that are really, really way more advanced and just a lot further forward than a lot of investors think. Protecting the past. I mean, this is really important, and it's not a cliche. I mean, this is a planned view of the old workings, and this road is really important for the simple reason that's the plant site, with the exception of the plant site, and these are the old what they call cementation ponds. 200 years ago, the way they used to mine this, or the back end of the mining, was they would throw lots of old steel into these cementation ponds along here, and the copper solution from the mine would feed into them, and the copper in solution will just attract to the iron, and then they pull the iron out, and then they just scrape the copper off the iron. So I mean, they're all pretty toxic, really. And so we originally, in the original proposal, the company had planning permission to put the tailings here. In fact, when the pilot plant was run, that there is the actual tailings dam from the original pilot plant. So this is an area we'd like to use, and then this plant site. Everything else, all the underground workings and surface infrastructure will all be on the north-western side of the road, and everything's going to be underground. I mean, these ore bodies, I've just projected these to surface to give you a sense as to where they sit. But White Rock starts at about 60 metres below surface, and the deepest one, Northern Copper Zone, that goes down to about 550 metres. So everything's underground, and it's all open along strike. And so there's a lot of upside here. Again, the upside, I can speak to the upside in terms of the exploration or lack of that's been done, especially modern exploration. Since 1997, there's only been 28 holes drilled here, and they were largely infill holes. There's been very little geophysics done here, or modern geophysics here. There's just so much opportunity to bring some modern technology here and spend a bit of money and really find out what we've got here. Now, I apologise up front. You won't make much sense of some of these labels on here just because of the clarity, but this is just to give a sense as to the scale. So that's the White Rock Zone, where the shaft basically goes down the middle of that. This is the Northern Copper Zone. Now, the wireframe or the block model that we generate our numbers of stops about there. What's really interesting here is there's not a lot of holes in this Northern Copper Zone, but there's some definite trends within it. And this red rectangle here that sort of surrounds these green labels, these are the assays and the intersections from some of those, or from pretty much all of those green labels. There's a high-grade shoot down here that's very much worth following up. And at the moment we've got about just under 10 million tonnes here. I think there's a lot of space between drill holes. We can find a lot more metal here. I think there's a connection between this ore body here, which has got very few holes in it, and this over here. So I think there's a real opportunity to spend some money on some drilling here and really prove up a sizable higher grade resource. Now, I used to work in broking for a number of years, so there is a bit of a broker in me, and I do like to sort of just point out how cheap we are relative to some of our global peers. And this presentation is now up on our website, so I won't go through them all. But the next slide is probably a better way of showing it. And we have the grade in copper equivalent for all of the comparable companies. We have the resource size of the resource, so we very much sit in the pack. And then the bubble size is the enterprise value per pound of copper. So we're sat there at about 2 cents per pound versus, I think our most direct comparable is this EM2, which is an Australian listed company called Eagle Mountain Mines that have got a project in North America, lower grade, smaller tonnes. They have some infrastructure. It's an old mine as well. So there's a bit of catch-up, and I think the reason the market has sort of not missed Anglesey, but it undervalues it, is there's a history that over the last 5 to 6 years, maybe things haven't happened as quickly as people wanted to. There's not been a huge treasury to go and do the work. And so, look, I mean, has there been a missed opportunity? Maybe, but that's now the opportunity for us to take forward. And I'd like to think that over the next 12 to 18 months, we'll be getting our bubble size up certainly a bit bigger. So this is Grangersberg, which is, we haven't historically spoken much about this, but it's going to get a lot more airtime. We're currently doing the pre-feasibility update. I think it's a gem. I really do. I think this is the old mine. It's an open pit and then 4 shafts which went down. It's a magnetite mine, so it's an iron ore project that's 41%, which gets upgraded through a concentrator and produces a plus 68% concentrate, which is very, very desirable these days. All the infrastructure, there's a lot of infrastructure in place. These shafts, it's all flooded, so it needs to be dewatered. But that will come out of the study. There's a railway right next door, the original railway, and there's 280 km to the nearest port. which is an ice-free port, which is important. This is just a picture of it digitised of all the underground workings, just show how extensive it is. Now, the original PFS in 2012, I mean, it was based on a 2.5 million tonne per annum project producing, plus 68% iron ore. Now, there are some comparable companies out there listed on other exchanges with assets that probably aren't as advanced as this, with some pretty chunky market caps. So, I'd like to think that as we progress this through the PFS over the next 2-3 months, we'll start singing the praises of this one a bit more. And we do have the right to go to 70%. So, I mean, obviously, we want to do the PFS update to basically arm the board with the information to make that decision. But in an environment where people are looking to shorten supply chains and reduce their carbon footprint, high-grade iron ore is very important, because that's exactly what it does for steel producers. And we do have the ESG slide. It does feel a bit tokenism, but we're currently engaged with a group that's going to be giving us a bit more of a profile on the ESG front, which going forward for institutional investors is very important. I mean, we don't take it light at all, and our relationship, especially with the community, given the history of the mine site and what we think is still to come there, we really think this is a very important aspect of all mining. It's your license to operate it. Without it, you've effectively got nothing. So anyway, that's 1 minute over, but I think take some questions. Around Parys Mountain, it really is. It's the main mine environment that you see on that plan. It does extend. It extends about 1 kilometre to the north, 1 kilometre to the west. We've got basically. I mean, we have an agreement with the Marquis of Anglesey on the land we don't own freehold. So we've got the entire mineralised system. Put it that way.
So if you find something, you can go a bit further out.
It's not. Yeah.
Yeah.
That's a good question. Maybe we'll put it in the next presentation. But we do have we can put a slide together where it shows that what's deemed our area of control for mineral rights. So yeah, so we're pretty relaxed. We've got the whole thing. I mean, employment's a really good question, or really good point to bring up, because I mean, Anglesey's had some pretty big shocks to the employment industry over the last few years. I mean, obviously Rio Tinto shut down the big smelter at Holyhead. The Wilver nuclear power station, which is sort of 4 miles away from the mine site, is now in decommissioning. In Amluk, there was a plastics factory, rehouse, that employed 250 people, that was shut sort of 2.5-3 years ago. The Octel bromine plant, is shut. So employment's really important, and we would, at full scale operation, we'd be looking to employ about 120 full-time employees.
The local community in the small town there, have they got any expertise in mining, or they would be mostly farmers?
Well, excuse me.
So you'd have to retrain them and bring in people from the outside, which would deny the people.
No, we've had these discussions with the local council. I mean, I'm from Cornwall originally, and I have a view that if you can be a farmer or a fisherman, you can be a miner. That's my view, all right? And there is a very strong tradition of mining in this region. Whenever I try and spend sort of between 3 and 4 days on site every 2 weeks, and whenever I'm up there, I'm bumping into people in the pub, in the hotel, in shops, and on the street. It's like almost everybody I speak to used to work on this site when it was first operating. Now they're getting a bit older.
When it's shut, most of those people will be retired now.
Well, they are.
People would have to be trained.
But the important thing about that was when they started up there, they didn't have the skills either. We would make an absolute promise and we have made a promise to the local council that we'd have agreements in place with Coleg Menai, which is the local college in Llangefni, where we would put training schemes in place. We would want as many people working locally as possible from local. And so you've got 120. You're going to have to bring in some specialty, jumbo operators and stuff like that are going to be fairly specific, and maybe to guys running the plant. But So it's 120 direct full-time employees. It's probably another 450 to 500 indirect within the region as well. So, you know, this could be a very significant development for the region. No, the mine's not operational. It last operated, so they sunk the shaft in 1988, 89, and they took the bulk sample in 1990, and then they went to raise the money to extend the shaft and press ahead. They effectively had the bank debt was put in place, or it was agreed. They went to raise the equity, and one of the aspects that sort of undid them was the Gulf War, and metal prices collapsed, and everybody kind of turned away from mining. So, I mean, it's always very difficult to put a timeline on things. I mean, you know, what I was trying to demonstrate with that metallurgy is that there are some aspects of this project that are way more advanced than people think. You know, we've probably got to go through a full environmental impact assessment, to get it re-permitted. It's considered a dormant mine site by the Mines Department. So it is easier to get it restarted than starting a new one, but we still have to do that. And whether that takes 6 months, 12 months, or 18 months, we don't know yet. So I'm not going to lie. I mean, I'm not even going to guess. We just simply don't know. But my view is over the course of the next 12, 18 months, maybe 2 years, you know, we could be in a position where we've done the infill drilling, we've done the last bit of confirmatory met test work. We've got the EIS either finished or largely underway, and permits are, you know, approaching. So, you know, that's the sort of time frame we're thinking that, you know, again, I'll get trouble. You get held to all these things when you put time frames on. But, you know, I'd want to be in a position where we're looking at a development decision within 2 years. No, we're not raising money at the moment. Yeah, we've got about just over $1 million in the bank. Excuse me. We're sufficiently funded to complete the work programs that we've committed to, you know, last year. So I mean, we are a junior resource development company. You know, you always get asked, and I used to do this when I worked in Broke, when I worked as an analyst. You know, you ask people, well, you know, are you raising money, or how are you going to fund this? You don't know, right? Are we going to require more equity? Yeah, of course we are. When? Don't know yet. Could this thing carry debt to get once we've got to a development decision? Yeah, absolutely. Could we look for offtake funding? Absolutely. So look, I mean, there's a lot of options there, but in terms of between now or from now to a development decision, there's too many moving parts to be able to say it's going to be X million dollars and this is where we get it from. So under the terms of the original planning permission, it's not about upgrading the ore underground. It's about one of the noisiest aspects of any process plant is actually getting big rocks into small rocks. Yeah. And so yeah, dust and noise. So part of the agreement, part of the conditions are that the primary crushing, which is the loudest part, is done underground. So you have the primary crusher underground. Because we've got the shaft, we could put a primary crushing pocket down about 40, 50 metres underground. Then you just run the plan has a conveyor belt that then runs that back to surface straight into the plant. And where we are, the plant would be in a building as well. So yeah, we're very lucky because we've got the shaft there. It's very easy when we because we're going to be declining down as well. But we can use the sort of the top part of the shaft if we need to fit a crushing circuit in.